What's up, guys? Welcome back to the channel. I'm Mark with Not Your Father's Capital. Let's get going. Let's talk some crypto breaking news. This is something where I want to share with you guys my thoughts on Bitcoin a little bit, on some of the more broader market stuff within U.S. inflation. So I'm going to break it all down for you guys in this video. Like I said, though, make sure you guys all subscribe down below. Smash that like button. If you're new to the channel, welcome. We talk crypto every single day. Glad to have you, and let's get down into the news. All right, and this is not financial advice, guys, so please do your own research and due diligence with all things crypto and financial. All right, but we're seeing how U.S. inflation can still move Bitcoin's price. Now, this is something where we saw a little bit go down within the more broader conditions, right? And it's something where I want to really take the time to talk to you guys about my feelings on this because it is important, all right? This is going to be something more full circle because we're seeing a lot of these core metrics, right, that really lie within the inflationary data. And this is something where we can put in perspective how this translates and how this is important to Bitcoin. So I'm going to break it all down for you guys. And as always, at the end of this video, I'm going to share with you guys a little bit what's going on within Bitcoin on the trading view. We're going to take a dive into the chart. So make sure you guys all stick around to the end and let's get down into it. All right. This is kind of what we come down to when we talk about the numbers and why U.S. inflation is so important in Bitcoin. Okay. We've had the federal funds rate between 5.25 and 5.5% since March 22, which is something where a lot of prices have cooled off in certain sectors, except for the housing market. But this is something where within these times, people are selling risky assets when they feel the central bank may reduce a recession by tightening fiat currency policies too aggressive, which kind of is what we've seen. Now, that's where you look into the ultimate mantra where we talk about Bitcoin being the ultimate hedge against inflation, digital gold, right? Well, now we've seen investors, instead of going into Bitcoin, I mean, theoretically, that's what should happen. They should be flocking into Bitcoin, okay? But we've moved into more stable investments such as government bonds, and when we start seeing, the banks start to cut rates, conversely, that's when we're going to see the riskier assets such as digital crypto. That's where you're going to really see some of those really start to get back into it from an institutional level, I think more so than ever, okay? But more, we talk about the plans for the borrowing within 2024, and this is where the government's willing to take on more risk. They're going to be borrowing money, and that's where you look at more the appeal of government bonds due to the chances of default decreasing, all right? And because of that, some investors may choose Bitcoin. All right. But now we get into the thoughts on why people may come back into Bitcoin. All right. Now this is coming out from the First Gold ETF co-founder, Hector McNeil, saying a Bitcoin ETF vehicle will increase adoption. All right. And we all have already talked about that. And quite frankly, when it comes down to my personal opinion, I'm very much in a mixed bag when from day one, from the get-go within the Bitcoin spot ETFs. I didn't really like the thought of letting all the institutions back into something that we're trying to keep institutions out of in the first place, okay? I understand how they're going to make money, but I know how to trade crypto. I know how to store my crypto. I know how to access my crypto. I just really didn't want more avenues of the government basically paving a road to come in and take care of my crypto, all right? Because I don't really need it. I have my means and I have my ways of doing it right now that work for me. But I understand how some people out there just want to take, a 2-minute drive down to the nearest Edward Jones and, have access to crypto and Bitcoin through the vehicle of an ETF and do it that way. And that's okay. But right now we're seeing these institutions liquidating, and it's something where it's hurting us as retail investors. And alike, it's really hurting the price of Bitcoin. And that's kind of what we're at, and we've recovered a little bit. We're down now just a touch below 42K for Bitcoin. And that's what it comes down to, guys, giving market access to difficult to trade asset classes, okay? And that's what the statement is, and that's what the take-home message is, okay? So McNeil expects Bitcoin supply constraints to push the price up gradually, okay? Even though that most people do not use it as currency, more so as a store of value. And that's kind of where I'm at within Bitcoin as well, because quite frankly, if you go out and try to actually use your Bitcoin, with the exception of a few cities that have access to the Lightning Network and you can do so in that regard, the fees are crazy. Sometimes you'd be paying more in Bitcoin to use your Bitcoin, and those third parties, those ATMs, those whatever you have, whatever merchant it is, they're the ones making money off the Bitcoin, and you're losing more Bitcoin. So for me, my liking is right now it is truly just a principal store of value for me in Bitcoin. So that's our relationship. But more so, we talk about it. The Bitcoin spot ETF is going to possibly have in effect, just not so much right now we're having the effect that we want. But inflation, guys, it's something where you have to understand. Over last December, guys, rose almost 3% on the year. Okay, core PCE increased 0.1% monthly, but declined 3.2% on the year. And this is what's going to be very interesting when we put it all together, guys, and we come out with what is in store for Bitcoin. Because, guys, it is going to be a fascinating year for Bitcoin. Spot ETFs, as well as the Bitcoin halving coming about, and now so much in the presidential election. This is going to be a very, very fast-paced and a lot of triggering events, in my opinion, for crypto and more so Bitcoin, the riser of all tides. Okay, but let's take a quick look into it, guys. A touch below 42K. You can see this nice little resurgence we've had. And if you're wondering what all these boxes are, guys, this is my trading indicator. It is a very valuable tool for trading crypto. I use it every single one of my trades. It is something, it's not really something I'm going to give you guys a sales pitch on. But guys, it simply works. And just a little bit over $1 a day with what they charge in Coinbase fees, whatever platform you use. Really, it's just an insurance policy for me. It's not a crystal ball. But guys, whenever I'm buying, I'm selling, I'm executing a swing trade, or I just want to confirm a longer position that I'm in and just kind of see where I'm at, I always refer to this. This is 45-minute candles, so you can really tailor it to your needs. Get an alert right to your TradingView app when you have these indicators go off. It sounds like a nuclear bomb's going off. It sometimes wakes you up in the middle of the night. And it's crazy because I've never used to trade crypto in the middle of the night, and now I have a vehicle to do that within my TradingView alerts. And right now you can see, guys, just to put in perspective, this was late in the evening, momentum down flash with Bitcoin at 41.7. This was on Sunday, January 21st. Got a momentum down flash and really was able to, you'd be able to exit that position, save almost 5-6% in a few days, where until the next momentum up flash. And then if you were able to enter a position here, boom, momentum up. And if you were able to hold on, sorry about that, my ruler went away. If you're able to hold on from this momentum up, guys, you can look where we are at right here, right now, just a touch over 5.6% in a little over 3-4 days, guys. So that's something what's really important, and you're able to realize some of these gains. It's not a crystal ball, but these momentum up, momentum down indicators, they really do work. They've saved me a ton of money, and like I said, guys, just over $1 a day. It's really a priceless tool for my crypto trading. And as always, guys, it's a 30-day money-back guarantee. So use my promo code NYFC, link down below in the description. Do your own research and due diligence and check it out. 20% off using my code, 30-day money-back guarantee. And guys, it simply works. All right. So that's what I got for you. I wanted to share with you guys my thoughts on Bitcoin and why inflation within the United States is so important to Bitcoin and what lies ahead for 2024. So I hope you guys are all doing well and found some value from this video. If you did, absolutely consider subscribing down below to the channel. I really appreciate you guys being a part of the team here at Not Your Father's Capital. And as always, guys, we'll see you in the next video. Cheers.
Thank you.